And up next, we'll have a first conversation talking about Q1 2025 capital inflows. Stay with us. We'll be right back with that conversation for you. In the first quarter of 2025, Nigeria recorded total capital importation of 5.64 billion naira, marking a 67.12% increase from $3.38 billion in the first quarter of 2024 and a 10.86% rise compared to $5.09 billion in the fourth quarter of 2024. This is according to the National Bureau of Statistics. Portfolio investment dominated inflows totaling $5.20 billion, followed by other investment at $311.17 million, while foreign direct investment amounted to $126.29 million. Well, joining me to unpack this, I have Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham. Thank you so much for joining me today.
Good morning. Thank you very much, Petra, for having me on.
All right, we have an upswing in capital importation for the first quarter of 2025. I mean, we're talking a whopping 67.12% increase from 2024. You know, I would like you to talk to us about this. What are you reading from this?
Well, I think when you compare what the number for Q1 2025, and you're actually comparing what we had Q1 2024, it's actually miles apart. And when you look at what happened at Q1 2024, that was about the time that the current CBN administration actually started to actually be more very effective. If you can remember vividly, we had the first MPC meeting in February 2024, and we had another one in March 2024, where the central bank actually hiked rate by 400 basis points and 200 basis points respectively. So it was at the point where the investment community globally tends to actually understand that it seems Nigeria is waking up to their responsibility. And about that time, the central bank actually floated pockets of automobiles and the market just to actually reinforce that the move from a more like a doji stance to more like an hawkish stance, where it shows that they are now becoming more aggressive with monetary policy tools. And that's actually a bit of foreign investors into the market. But when you compare that to what we saw in Q1 this year, you understand that most of the policies of the central bank are started yielding results. And we have seen FX stability as of last year, January. We're still battling to actually ensure that we're able to actually stabilize FX. We saw a bit of volatility in Q1. Foreign investors are still very careful to actually jump into the Nigerian market at that particular point in time. But when you now compare it to 2025 Q1, it is crystal clear that foreign investors, they are now currently very, very comfortable with the Nigerian market. The central bank has been able to actually reinforce that confidence since then. We've seen a situation whereby on the Liberation Day, where the President of the United States actually announced a tariff increase. That actually created a bit of panic globally, and we noticed that Nigeria was not an exemption, as some foreign investors were trying to actually exit the market. And the central bank was able to actually meet the demand of these guys, and they were able to leave the market, and now most of them are back in Nigerian space. So when you look at all these things, the trajectory has changed drastically. Foreign investors are more comfortable in Nigeria. Foreign direct investors are also looking at opportunity that can actually they can actually enjoy in Nigeria economy. So when you look at it and compare, you notice that we have more stable economy in 2025.
You know, I like the fact that you brought the FDI into this conversation. Now, while that's a good one, talking about, you know, the upswing and the increase and all of that, a breakdown of the figures shows a recurring pattern. FPI is taking the lion's share, while when you look at FDIs and, you know, trade or other investments, they are often relegated. Is this concerning or something we need to get used to?
Well, it's concerning, but the first thing we need to look at is that when an economy is just coming out from a dungeon, the first person that actually starts coming to your economy is foreign portfolio investors. And why? Because at that particular point where you're trying to actually attract them to the market, you can easily attract them with your yield. Some of these guys, they are risk taker. They can look your yield vis-a-vis of the likely exchange loss, and they can actually make a decision whether to actually come to your market or not. So when you look at the foreign portfolio investors, they are more risk oriented compared to other classes of investors. And there's a thing in that for you to know an economy that is growing, you start seeing the foreign investor actually trooping, foreign portfolio investors first trooping into that economy. And what we are seeing currently is pocket of foreign portfolio investor actually trooping to America. So it means that the next line of investor that we expect to actually come to our market will be foreign direct investors. But one thing about foreign direct investors is that they don't just come to your economy. There must be policy that will actually drive them and bring them to your economy. Look at what's currently happening in the oil and gas sector. There's a bit of reform that the government's trying to actually put in place. These are some of the things that can actually lure them and bring them into your economy. And there are other factors, insecurity, and some of the things some of these guys will also consider before they actually will come into your economy. Your tax regime, economic friendly policies, these are a lot of things that these guys will actually consider before they actually come into our economy. And I think this is a line that the current governments are actually working around. They are working actually change most policies. And just this week, the policy around the insurance company was actually signed. And that's actually a good one to the market, because it also means that some of these guys can come to the Nigeria economy and get insurance, company to actually insure some of their risk. And this sounds great. But the problem currently that we are facing now is that when you compare the total volume of capital importation that we actually saw in Q1 this year, we saw about 5.6, and about 5.2 of it actually is for foreign portfolio investors. And these are people that we call the hot money. But these guys, they can leave anytime, unlike foreign direct investors. These people, when they see that there's a bit of panic in the market, what they will do is that they quickly fling the asset they are currently holding and actually exit your market. And what this will do is that it will likely put pressure on FX, which in turn will actually affect other macroeconomic indices like inflation and every other thing like that. So what the government needs to do currently to ensure that they actually increase the volume of foreign direct investment coming to our economy. And I said earlier, this is based on the policy that the government are showing out. So the government needs to be very creative around the policy they are actually showing out to market, so as to ensure that they are able to actually attract more foreign direct investors to the market.
Absolutely. We'll come to, FDI, increasing it and all of that. But let me talk about this, because I feel it's important. I mean, I was amused when I saw the headline about Nigeria recording the highest FDI year on year in 3 years, only to disaggregate the numbers and realize that on a quarter-on-quarter basis, investment declined by approximately 70%. So what exactly are we celebrating?
So I think, it's like when you look at a low base, you are comparing with a low base, and that's one of the reasons why it done that. And don't forget that sometimes last year we noticed, let's say from 2023, we noticed a great level of divestment from the oil and gas sector. Jeep actually left the market. We saw other pockets. Mobile actually sold some of their businesses. They moved to Angola, and don't forget that these are times when we were actually seeing a lot of crisis in Nigerian economy. And in 2023, 2022, 2023, we barely can produce 1 billion barrels per day. But currently, we are currently north of 1,800,000, which is more like our quota. So it seems that a lot of things are changing as we speak currently, and this can actually attract investment into that space. And that's one of the reasons why the government understand that to actually drive the economy, you need to actually shun out policies that will actually economic friendly, they are business friendly, that will also help to give confidence to investors that are actually coming into your economy. And that's exactly what I think this current government is trying to look at.
All right. I mean, there is no gainsaying that PFI is accounted for approximately 92% of the total foreign investment, up from around 79% in Q4 2024. However, isn't it worrying that money market instruments made up 81% of the total PFI inflow? totaling $4.2 billion. I want you to comment on that. That's on the one hand. And then on the other hand, there was also this headline about the banking sector attracting the most. Did it really attract something, or it's just the fact that, these things are rooted through banks, so financial institutions. So at the end of the day, they don't have a choice but, to have that large number. And then when you look at sectors that are really important, that need these monies, you can see that only very little sum or very little amounts came in through or into those sectors. I'd like you to comment on all of this. How to strike a balance, really? And what does a balanced inflow look like for you?
Well, it's a great concern when you look at that higher percentage of this inflow actually is in money market, and like I mentioned earlier, some of the things that actually attracted most of these guys into the market is the attractive OMO rates. The central bank has been aggressive, like I mentioned to you, since last year, February, and they've not stopped being aggressive because they are trying to rein in inflation. They are trying to mob the huge liquidity in the system. And when you look at that and at the fact that what foreign portfolio investors are always looking for is return, because some of them, the portfolio they are managing is about return. And at the same time, they're also looking for ability to actually do more like a carry trade. And when you look at the return on Nigeria instruments, where you can get as high as 26, 27% effective return on some of these instruments. So it's a very good one for most of these guys. And that's one of the things that's actually attracting them. And like I like to earlier, the concern is that when it's prices, this guy will leave. And when they are leaving, it will put a lot of pressure on FX. We've seen this thing happen when Nigeria was actually removed from JP Morgan Bond Index, I think it's 2015. And we saw that foreign portfolio investors that left the market was north of $12 billion. And in the short term, the CBN was trying to actually manage and provide. But in the long run, we can see the impact. The impact was the fact that we had to now move into more like a fixed exchange rate system. And that was not very good for our economy. So it's not a very good one because in a very good economy where you actually expect to actually see impact, you are supposed to see at least more of foreign direct investments coming into the economy. And the worst case is maybe like a 50-50 because the foreign portfolio investors also have a vacuum that they actually fear. But the best is to actually have foreign direct investment coming into your economy. And on the issue of the fact that the industry that actually attracted most of this funding, that is banking sector, of course, it's not unexpected because if you mention that 80% of this inflow is actually into money market. So who is money market? This is simply the banks. It means that for you to actually attract or actually participate in the CBN OMO auction, you have to go in through the banks, and some of this inflow will go to the bank and will be accounted under the banking sector. And but I would not also say that all the funds that we mentioned, the old that was actually attributed to the banking sector also is from this OMO or money market investment. Don't also forget that banks also actually did some banks like GT Bank, Zenith, Access Bank, and a pocket of other. They've completed their capital raising for new capital requirements. And we've seen some of that have done their first stage of capital raising. And most of these opportunities too, a lot of foreign investors actually take advantage of this as well. A lot of foreign investors actually invested in this as well. So you will also understand that part of this also account for the total inflow that actually comes under the banking sector.
I'm afraid we need to go now. In less than 30 seconds, what's your suggestion on improving FDIs, and what sectors do you think this, money should come in through? In about 30 seconds.
I think that the focus is, like I mentioned, is the policy. We have to actually show a great policy that can actually attract foreign investors into the market. We have to remove insecurity. We have to work to ensure that the Nigerian environment is secure. And for me, in a count of two, if you want to talk about a sector that you feel should attract this thing, I still will talk about the oil and gas sector, I'll talk about the mining sector, and I will talk about the agricultural sector as well. Because these are three key sectors that I know that can quickly, more like give us the low-hanging fruit that can actually help to actually increase our FX generating capacity and be able to actually meet our FX obligation as I went due.
All right, thank you so much, Oladipo Ajayi, Head Fixed Income and Forex, Chapel Hill Denham, for your thoughts on the show today. Do enjoy the rest of the day.
Thank you very much, Professor, for having me.